Talking about economy as well, we have Samyakanti Ghosh, of course, the Group Chief Economic Advisor at SBI, joining us to talk to us about what's happening in terms of the macros with the RBI MPC meeting underway, what should we expect and all that and more. But Mr. Ghosh, before I come to the MPC meeting, I wanted your sense as to what's happening to the yield rates globally as well. 10-year coming down from the levels of 5% plus to 4.2, 4.3% thereabouts. What's the normalized level world should kind of make do with? Do you think 4.2, 4.3 is the new normal or headed lower?
Yeah, good afternoon. I think as we have said in our report recently, I think the outlook on the global economy so far that the US could actually spare a major recession. There could be, and the growth has been very strong. But beyond these headline growth numbers, I think the US market numbers the real economy numbers doesn't look so inspiring at this point of time. If you look at the payroll numbers, they have been revised downwards by 8 times in 9 months. There has been also some recession indicators which showing that US could be possibly on the verge of a significant slowdown. The only thing which is keeping the US economy headline growth strong is typically currently the excess savings which the US consumers have built up over the years of 1 trillion, but that is inflated. So taking all this, and there are other factors also, and taking all these factors into account, I think, and given the fact that the Brent crude prices, as you know, is also taking a dip, these decline in the real economy, the yields indicate that the possibility the US economy could be headed for a slowdown in 2024. How far and what extent will be the slowdown is a matter of debate because, as you know, the US is also poised for elections in November 2024. So that will also be taken into account by the markets. But my sense is that at the margin, I think the decline in yields is actually giving enough hints that the all is not well for the global economy in terms of a growth momentum.
All is not well for the global economy in terms of growth momentum. But let's, come to the Indian economy as well. Mr. Ghosh, this is Vinny joining in the conversation as well. Let's talk about tomorrow's meet that is there as well, MPC meet. Okay, this time we are expecting, again, the rates will remain at the same levels. Status quo is expected to be maintained. But, in terms of how long do you see this sustainable in terms of, not taking any rate hike or rate cuts? How long do you think this process will go on? And especially in terms of GDP also, what's the target and outlook that you have for FY25 onwards as well?
See, in terms of a rate hike, I don't see the RBI actually hiking the rates because the RBI also has been taking other measures to keep inflation in check. Liquidity, controlling liquidity overhang in the banking system is one of them. The macroprudential norms in terms of raising the risk weight is another. So I don't think that is at this point of time, the rate hike is one of the priorities because the RBI is on a prolonged pause. But the point to remember on inflation is that I think the food prices are actually not showing signs of significantly abating down. If you remember and if you observe that the vegetable prices, specifically the tomato and onion prices, has currently been again rising. So this could actually push the November and December inflation numbers well beyond 6%. So from that point of view, the RBI will pause, but it will strike a note of caution that is prepared to look through the cycle and take steps if there is any unforeseen increase in the inflation outlook. That's the first thing. Regarding the growth, I think growth outlook remains very strong as of now, but in the second half of the current fiscal, the growth is likely to come off because of a higher base last year and also because of some declining momentum. But even at the margin, I think our forecast was above RBI forecast of 6.5% from the beginning. And currently, we have penciled in a growth rate of 7% of this fiscal. But next year, there could be some moderation and 6.5% growth rate next year. As of now, looks a distinct possibility. But next year forecast is still early yet, and things could actually change the way if there is more macro political stability that builds up at the center.
Mr. Ghosh, point taken, but what's your own assessment in terms of when the rate cut cycle will begin? Because there are estimates on the street which are talking that it can be as early as perhaps March, April itself. Would you concur with the view that it could be pre-election as well? And secondly, everyone is talking about the Amrit Kal in India, the Goldilocks scenario. What could go wrong? Anything that is worrying you, whether it's the unemployment data or anything else that remains a key monitorable?
No, you see, in terms of rate hike, we have pushed the date for the first rate cut if it happens to the second half of the next calendar year. So basically, in 2024, it could be after in the second half. So basically that is Q2 FY25 is the earliest when we are penciling in any possible rate cut from the Reserve Bank of India. But regarding the second point, what could go wrong? I think the global economy has been subject to swings of vagaries. There has been many tail events in the last 15 years. 2008, we had a tail event. 2020, we had a tail event. 21, it continued. 22, also there was an Ukraine conflict. 23, there was a Middle East conflict. So I think the only thing which could cause a state of bother is a slowdown in the world economy and possibly, but that's actually an interesting part because as I mentioned at the beginning of the show that the US also has elections in November 2024. So maybe the US Fed could be, I mean, if there are any indications, there could be rate cuts from the Fed in 2024 earlier than that. And that also could indicate that there is some sort of a slowdown which has already started to happen. In fact, if we look into the data of the US consumer spending and other data, labor markets are saying house prices are now declining in US. So I think taking all these factors into account, I believe that possibly the slowdown in the global economy, specifically US, at a rate which is larger than anticipated by the market, could be the possible source of outside risk for Indian economy.
Okay, Mr. Ghosh, thank you so much for joining in with us this afternoon on ET, giving us an understanding of what we should be expecting tomorrow as well as going forward from the MPC meet as well as the governor as well, the RBI governor as well. But thank you so much for that. Let's